July the 30th, Reuters. BOJ commits to easing further if inflation sputters. However, it's keeping policy steady, at least in public. The Bank of Japan held off on expanding stimulus on Tuesday, but committed to doing so without hesitation if a global slowdown jeopardizes the country's economic recovery. Growing fallout from the US-China trade war has prompted major central banks to signal more easing and put pressure on the BOJ, which has far less policy ammunition left to deal with a significant downturn. BOJ Governor Hirohiko Kuroda said the central bank strengthened its commitment to act preemptively against risks to the economy as protectionist policies and trade tensions were delaying an expected rebound in global growth. I don't think Japan has lost momentum to hit the BOJ's price goal, or that there is an imminent risk of this happening, Kuroda told a news conference. But overseas risks are heightening. If this is prolonged, that could increase risks for Japan and threaten the economy's momentum to hit our price goal. If this happens, we will ease policy without hesitation. As widely expected, the BOJ maintained its short-term interest rate target at minus 0.1% and a pledge to guide 10-year government bond yields around 0%. It also kept intact its forward guidance on a pledge central banks make on future monetary policy, committing to keep rates at ultra-low levels, at least through spring 2020. But the BOJ added a line in its policy statement that will ramp up stimulus without hesitation if there is a greater chance of the momentum for hitting its price target is lost. BOJ officials have recently said the central bank won't hesitate to consider easing if the economy loses momentum for hitting its price target. The new language in the statement is a stronger pledge because the central bank is committing to act immediately to forestall risks of loss of momentum, Kuroda said. In a way, you can call it preemptive easing, he said. The protracted Sino-US trade war has hurt Japanese exports and business sentiment, casting doubt on the BOJ's view that robust domestic demand will offset the pain from the global slowdown. Global growth has slowed, particularly in Europe and China. As a result, Japanese exports to China have fallen and business sentiment has deteriorated, he said. The impact of the global slowdown is broadening. The BOJ cut interest rates, ramp up asset buying, speed up money printing, or combine the steps, Kuroda said. In any case, we will consider steps within our current policy framework with an eye on the potential downside to the banking sector, he said. We still have various means to ease policy. Years of near zero rates have hurt financial institutions' profits by narrowing the margin, leaving the BOJ with few tools to fight the next recession, let alone ramp up steps to accelerate inflation to its 2% target. Easing by other central banks could also trigger an unwelcome yen spike that hurts Japanese export-reliant economy. Article number 2. Japan government to earmark $40 billion to boost growth in FY 2020-21 budget. Japan will earmark 4.4 trillion yen, 33.2 billion pounds in the next fiscal year's budget for measures to spur private demand as well as enhance science and technology as part of the Prime Minister Shinzo Abe's growth strategy, government sources with knowledge of the matter told Reuters on Tuesday. In an effort to push more funding to growth sectors, The government will urge ministries to trim spending in other areas, such as public works, by 10% from this fiscal year, the sources said, on condition of anonymity, because they are not authorized to speak to media. The proposed spending plan, which is yet to be approved by Abe's cabinet later this week, will be part of an outline on the budget for the next fiscal year that begins April 2020. As part of the steps to rein in the industrial world's heaviest public debt, which exceeds twice the size of Japan's $5 trillion economy, the government has pledged to balance a primary budget excluding new bond sales and debt servicing costs by the fiscal year end to March 2026. So this is Japan and the Central Bank of Japan trying to get inflation into the economy and failing miserably up to now. With interest rates already at zero, all they can do is print money or go negative. Going negative is a terrible signal, and printing money is well, it should it should stimulate inflation, but this is what they're up against, Japan. Moving on to this site, the World Population Review, which is quite an interesting website, looking at the demographics of Japan. Japan is currently the world's oldest country, and it's set to get older. The number of elderly people aged 65 or older accounts for 26.7% of the 127 million total population, up to 3.7 percentage points from 5 years ago. A summary report of the 2015 National Census shows. In 2050, it's estimated by the government that 40% of Japan's population will be over 65. And this is what financial stimulus is up against. Because no matter what you do, how much money you print, or how much money you throw in front of people, the fact is, the older you get, the less inclined you are to spend money. And that is an established principle, with the effect that approximately, because to have money you have to have a job, you have to be a certain age to have achieved a respectable wage. The end result of that in countries like Japan, and increasingly the West in general, is that about a third of the population is actually spending significant amounts of money. In Europe, it's really quite similar, because the youth have no money if they haven't got a job. If they have got jobs, they've got really terrible jobs, which means that you effectively have to be middle-aged to have enough money to spend in the first place. And the economic signals sent out by zero interest rates or negative interest rates are just so terrible. I wouldn't be thinking about splashing out until inflation takes off to such a degree that it becomes irrational to hold cash. Anyway, sorry if that's a bit miserable.